I don't want you to show up and now tell me, oh, don't worry, everything's great, because you've been more rosy than a lot of other people. This is ugly and it feels horrible.
Yeah, no, I think we're getting kind of some real opportunities now to buy good companies at low prices. I mean, earlier today, about 2 hours ago before I came down here, I'm a former semiconductor analyst. I was looking at the semiconductor stocks down 25, 26 year to date, thinking, it might be time. There's almost, I feel very low chance they don't beat the market in a, 18-month, 2-year, 5-year view massively, because they have, above, economic growth and just so crucial with big technology moats. So you're starting to really see things feel like they're on sale, and I think the fundamentals from this earnings season have been pretty decent, actually.
But see, here's the thing, okay? And you've been coming here and saying that...
It's only on Fridays. During the week, everything's fine. It comes to you. The market gets killed.
Last Friday, we had an awful day.
Right. It's just us being together.
We had a down open, and then we had a reversal.
Yeah, great earnings.
And maybe we thought things were pretty good, but here's the point, because you keep saying earnings are going to be better than people think, okay?
Numbers are coming up, yeah.
You know what? Doesn't matter, because the other numbers that matter are going down, and that's the stock prices, even on good earnings.
Sure. I think obviously the market is anticipatory. You and I talk about that a lot, and so I think people are starting to discount, frankly, a worse U.S. consumer, right? Because you can't really be bearish on the economy and bullish on the consumer. So when I spent time going through the earnings, and we've seen a couple hundred earnings reports in the last 4 or 5 days, they look pretty solid to me. I mean, consumer companies generally are beating. The banks all across the board, every single one of them, Goldman, Citi, JPM, all said consumer conditions are fine, right? Credit card data showed less delinquencies this month than last month. So I come out of this week thinking I'm not seeing demand destruction for oil at the gas at the pump. From the Wednesday data. Again, I think the consumer's in decent shape. So I'm starting to get more constructive. I always come on your show and say, look, the algorithm for equities is 6 to 8% total return per year. That's what earnings grow. The multiple is too hard to predict. I'm starting now to get a little bit more optimistic in a 6, 12-month view. This is going to be a really good entry point for some stocks.
I mean, the consumer can fall apart pretty quickly. I'm wondering what you take from, this was a huge week in terms of mega cap earnings. Amazon, for example, e-commerce was weaker than expected. The guidance was lower. In fact, all across of big tech, Microsoft, slowest revenue beat since 18. Amazon, slowest revenue growth since 01. Alphabet, ads miss. I mean, at some point, you can't ignore a lot of this.
Yeah, I thought Azure, look, tech earnings will probably go 10% this year versus last year. The tech sector now trades at 22 times earnings. There's a lot of profitless stuff in there. Long-term average is 17, 18. Again, I just put context around it with any longer-term. If you're an investor, I think you're starting to get more optimistic. You can get stock. Look at Facebook. They were at 13, 14 times earnings. They put up good numbers. Stock went higher. So the starting valuation obviously matters. So look, it always feels bad when you have bad price momentum for a week or two. But when I'm looking around now, I see so many stocks below 15 times earnings that I think are going to have earnings growth. So I'm starting to figure out, should I go in and buy the semiconductor index? I can name you 8 tickers that I'm confident have technology moats.
I don't know if you can remember 8 off the top of your head, but name 3
ADI, Texan, Synopsys, Cadence, AMAT, Lam, KLAC. I mean, these businesses, ASML, they all have massive technology moats. Silicon's penetrating. They grow above GDP. The SOXL, the triple long semiconductor ETF, is down like 75%. I'm looking around thinking, 2-year view, 95% confident that group of 8 stocks kills the S&P 500.
You got to hope that. Look, PCs are slowing.
But these are diversified businesses, industrials.
You got to help that enterprise holds up.
It's everywhere. It's data center. Yeah,
hold up. Yeah. I know what we're talking about.
We can't function without these businesses because nobody else can produce what they do. So I'm just looking around thinking, we talked a little bit about biotech, and I'm like, is there really no innovation ever again? Do you think nothing's going to be safe or effective? Because mid-cap biotech is at an all-time low on price of sales. The pipeline is probably discounting almost no success. So I'm looking around thinking, for the first time now at these prices, thinking, wait a minute, this is a little emotional. I get there's disconnects between earnings and fundamental, and prices in a short-term window. It can last a couple months. But ultimately, if people think earnings are going to be up high single digit this year and still think growth is going to happen next year, these prices are going to turn out to be very good entry points here at the end of April.